You gotta be flipping my flapjacks, ladies and gentlemen. Do we have a lot to get into here today, including I spent six figures plus on some stocks here today. Okay, we got so much to get into. Public countdown a whopping $257,000 here today. That's a holy smoke, as this ain't no dang jokas right on the floor type day, okay? We call that a bloodbath. It was an absolute bloodbath out there here today. My two biggest expenses, to put this amount in context, last year in 2024 was one, I did this pool, spa, fountain wall in my backyard. By the way, best money I might have ever spent. The kids and I have enjoyed that thoroughly. $120,000 that was, right? And then the other big expense I had last year was I bought the Ferrari. That was $240,000 cash after all the taxes and all that, right? And so, yeah, it was definitely a big number. Like you could build a couple pools for that much, very nice pools, right? Now, we got to put this into context, right? Because back in April, the public count, you know how much it was? $2.4 million. So yeah, we were down huge today, right around 3.7 mil. But gosh, when you go from 2.4 mil to 3.7 mil in a few months, I'll take that every single time. Like, yeah, we're down from the top, but like that's still an incredible run we had over the past several months, right? And not only that, we've had an incredible run the past 3 years. Look at where the public count was 35 months ago, less than 3 years ago. Public count was sitting right around $1 million. And here today, it's almost $3.7 million, right? So sometimes you just gotta like widen the view a little bit and you realize, oh man, like we have a lot to be thankful for here, do we not? Now, with that being said, there's damage out there, damage all over the place. Elf down 35% here today. Honest down about 30%. Celsius down 24 or almost 25%. SoFi was down about 10%. Fubo down 7%. AMD down 7%. Palantir, and by the way, look at how big AMD's gotten to be such a big position that even a 7% move up or down now, we're talking $50,000 for that stock, right? Palantir down almost 7 percentage points here today. There was some damage out there here today. We have a lot to get through. Celsius, this stock fell off a cliff today. Is this an incredible buying opportunity? We'll speak about that in this video here today, okay? Elf Beauty was the worst stock in the whole stock market today. The worst stock in the market, down 35%. We'll speak about this incredible opportunity in regards to Elf. Honest stock, the market cap on Honest is all the way down to $259 million. We're going to speak about Honest if there's a huge opportunity there. Then I'm going to share with you the stocks I put six figures in today. We'll speak about that in this video here today. Then we're going to get into some reactions. I want to react to this one from this analyst, BTIG, Jonathan Krinsky, on the S&P 500 going to 6,500. We know Tom Lee's talking about 7,500 by year end. Boy, do we have some differing opinions out there, right? Elf fell off the shelf. We're going to speak about that stock and listen to an analyst speak about it and kind of share my perspective and opinions. Elf is a very good company, but expectations were high going into the print. And then last up here, looking forward to Robert Frank, who really studies the high net worth, the super high net worth individuals, talking about how they're managing their money right now. I want to share my perspective and opinions on that here today. One thing and one thing only I need from you guys on a day like today. If you could just hit that thumbs up button, even if you're somebody that doesn't usually hit the thumbs up, can you just do that for me here today, okay? My public count was down 257,000. I hope it's not too much to ask for just a thumbs up. You know, please don't be stingy with the thumbs up for you, man. I stay out here for you guys. I don't care if it's a bull market, a bear market, a kangaroo market. I love making you guys content. I love teaching all the stuff I've learned over the past 17 years and, you know, taking things up to a higher level and keeping you guys focused on the long term, right? Pin comment down there here today will be to apply to my private stock group. People thought like, oh, you know, with Bitcoin falling and like financial assets in general falling, a lot of stocks going down right now, would demand weaken? Literally today, we're going to have the most members join the private stock group in the history of the private stock group today. I just added up the numbers of how many members have joined. I'm like, this is going to be a record breaker by far. So if you want to join us in there, I'm considering basically shutting the group off to new members once we hit 3,000 members, and we're at 2,875 members right now, and then reopening it at some point in time in 2026. So if you want to join us in there, that will be the pinned comment down there. I'm super happy. Like people are, you know, don't care about what their account says in the next 3 weeks, 3 months, 6 months. They care about what their portfolio says 3 years, 5 years, 7 years, 10 years from now, right? And when you go through my course curriculums, when you learn everything, right? When you get 1000x access, your chances you're going to have success in the market go up dramatically if you actually know what you're doing, right? If you look at me, I've been able to get through all the bear markets. On the bull markets, I make more money than I could have ever dreamt, right? Like, think about how much all my private portfolios are up as well. Think about, like, what do I own in my private portfolios? It's all the same dang stocks I own in the public count. So you imagine where my net worth has gone over the last 10 years, 5 years, 3 years, those sorts of things, right? And we've been able to have so many folks go through that, private group and reach 7 figures plus, right? I think we've had over 200 people scale their portfolio now to over $1 million and some over $10 million. And we've had probably 700, 800 people scale to 6 figures plus. So yeah, the results speak for themselves. Pin comment down there to join us, okay? Celsius Holdings. Listen, ladies and gentlemen, this stock does not deserve to be down the way it was today, okay? There's some other stocks that were down huge today, and I'm like, I get it. Celsius, no. Not only should this stock not have been down, I could make a strong argument that it should have been up today. And I can't say the same about a lot of the stocks that were down today. This one I can, okay? They reported a B grade income statement. Now, this would have been an A plus grade if it were not for one thing. Okay, so look at this. Revenue came in at $725 million. That's versus $265 million in the same quarter last year. Gross profit went to $372 million in this quarter from $122 million in the same quarter last year. But look at this right here. They had this one-off expense line item, distribution termination. It was a $246 million one-off here. Okay, so that made their profitability look horrible, right? It made them look like they lost money and those sorts of things. But we have a private stock group member that did a little digging in regards to this. This is one of the other beautiful things about having the private group. We're all digging into these stocks all the time, running projections, keeping up with the news. Look at what one of our members found here in regards to this distribution agreement, okay? PepsiCo has agreed to fund the termination fees associated with moving a significant portion of Alani Nu into the PepsiCo distribution system, resulting in net neutral cash position for the company. While the company's cash position will not be affected by the termination process, generally accepted accounting principles require the company to record the estimated termination expenses on the income statement. While the payments received from PepsiCo to fund such terminations are required to be recorded on the balance sheet and amortized over the life of the distribution agreement, resulting in a timing difference on the income statement. Ladies and gentlemen, that one-off is like the most fake one-off ever. Like, this is the best situation you could have imagined here, okay? So this is what just happened with Celsius. You just got a massive discount because people are lazy and the algos are lazy and they have no clue what's going on here. And so they think the company just took $250 million one-off fee when PepsiCo's funding it, right? Like, are you kidding me? Like, you got to be flipping my flapjacks. This is insanity. What happened in Celsius stock is insanity. And that's why I say there's a lot of other stocks that fell big today. And like, I could make a strong argument why they fell, right? Some of them definitely fell way too much. I'll be honest about that. But like, I could understand them not going up on their earnings. This was the one that I'm like, this stock should have been up today. This stock should have been, they just made a massive mistake in regards to this one. But some people do the research and do the digging and find out things and others don't, right? And that's the stock market for you. Now, what are my projections for Celsius? Okay, so here are my projections for Celsius and where the stock is going over the next few years. Basically for every case I have for Celsius is revenues are going to go up about 30% range next year in 2026. And then 100% net income growth there because they're not going to have that one-off next year, okay? Now, I think, honestly, I'm going conservative on both those numbers because you got to remember the Rockstar will be full year impact positive 26, and then Alani is going to be part year, right, where they weren't in 26. So that's going to help revenue growth as well, and then we know the Celsius brand is growing, and we know international. So I think 30%, I'm actually being conservative for all three of these cases regarding revenue. And I think I'm also being conservative with 100% net income growth because remember, there's a $246 million hit they had to take here in 25 that then's going to not be a hit in 26. Remember that. And then, like, profitability should go up quite substantially next year because you know why? They're not going to have any of these one-off like expenses in regards to the acquisitions like they had this year with Alani, with Rockstar. So honestly, could this company have net income next year of 600, 700, and maybe $800 million? The answer is yes. But I wanted to, like, would I be shocked if Celsius had net income of $700 million next year? Not at all. 0% I would be surprised. But I wanted to go more conservative. I want to have them a little less than $500 million in net income in 2026 for this company, okay? So that's how I ran all my scenarios. Now, additionally, for my bull case, I ran them only revenue growth of 15% per year, 27 through 29. That also might end up being a conservative number. When you think about Celsius's growing brand, when you think about internationals, like they're just starting to really get to that international opportunity, right? When you think about the Alani, obviously scaling of that business, I mean, 15% might end up being conservative. And then remember, price increases over the years and things like that, right? And then I have them doing 25% net income growth. They should get a lot of leverage on that, bottom line over the coming years as they scaled out. They don't really need to hire a ton more employees. They've done a lot of the hiring in the past couple of years, and now they got the Rockstar team, the Alani team, all that. If anything, they might actually lighten up on employees, in my opinion, over the next year or two. So net income should go up way more substantially than revenue should actually go up for the company, okay? So I've been getting $900 million in net income in 2029 under my bull case scenario. 35 to 40p would be fair for a company growing top line 15%, bottom line 25% in the drink industry. And so that would give me a compounded annual growth rate well into the 30s, ladies and gentlemen. Well into the 30s. Now keep in mind, 26 is such a key year because if they were to grow that net income to 600 to 700, $800 million next year, keep in mind that completely fundamentally changes all these estimates. Then we could be talking about, let me show you how much this changes it, okay? So let's say they grow net income next year by, I don't want to go, that's probably a little too much, okay? Let's say they grow it by 150% next year. So they push to 579 million. Look what that just did to my numbers here, okay? Now we're talking about CAGRs into the 40s regarding this company. So this is why 2026 is going to matter so much for what their net income is. Okay, keep that in mind for next year. Pay attention to net income because it's going to completely change these numbers here. I think I went very conservative with being net income of 463 million next year. That's a net income margin of only 14% roughly. Keep that in mind, ladies and gentlemen. Okay, base case for this company. This is basically just a fancy way of saying what I expect, right? Kept all the numbers for 26 the same across all the cases. Then I have them only doing 10% revenue growth on average, 27 to 29. Is that not a conservative number? I think that's pretty darn conservative. 15% net income growth. If you got a company in the drink industry growing top line 10%, bottom line 15%, 28 to 33 P is very fair for that company. And we're talking about a CAGR midpoint right around 20%, right? And once again, watch how this changes if we're talking about that profitability in 26 is a lot better, right? Look at how this changes my case. Now we're talking about the compound annual growth rate is actually going to be more toward the 25 to maybe even close to 30% range. Whew. Yeah, this is why Celsius should not have sold off today. It was ridiculous, okay? And revenue, as far as the bear case for the stock, I'm only doing 5% revenue growth, 5% net income growth. Yeah, and if that scenario plays out, it's going to be hard to make money in Celsius over the next few years, but not a very realistic scenario there, right? So Celsius this is a huge gift. There's no other way I can put it. If people are buying Celsius stock in these prices, they just got a massive gift here today. And all you can say is thank you very much for that. Because it looks clear to me that Celsius is on its way to becoming the next drink giant. And when we start talking about drink giants, we're talking about $50 billion, $100 billion plus market caps, right? They're $15 billion. So there's a long way to go in this party, all right? Next one up here, Elf Beauty. Oh boy, let me take a drink before we talk this one. Okay, this one got hammered today. Now, should Elf have been down? Yes. Elf should have been down today. Should Elf have been down 35 percentage points today? Absolutely not. I believe the company deserved to get dinged today, right? Because they missed their revenue estimates, and that people pay attention to revenue estimates more than anything in regards to Elf. So the stock should have been down. The stock should have been down 5 to 15%. Not 35%. This was way just the market being ridiculous, okay? Here are my Elf estimates for this company over the next, 4 years roughly, okay? Here's my bull case for Elf. 25% revenue growth in 26, right? Because they're going to have the full road deal, that's going to be fully integrated in 26 for the company, right? So their revenue should be very strong. The company's guided for 18 to 20%. I think they're guiding low because they missed revenue estimates 2 straight quarters. So I think they want to do numbers that they know they can easily beat. That's my personal opinion. Okay. So 25% revenue growth in 26, and then doing 20% revenue growth per year, 27 through 29, 35% net income growth in 26, and then 30% net income growth, 27 through 29. They should be able to run that business very lean. My guess is in 26, they'll probably get a lot of the cost out of the business. They're probably going to have a lot of duplicated roles because of the acquisitions they've done over the next few years. So I wouldn't be surprised if they do a layoff and maybe clear out some employees or something like that, or they just keep the current team and just basically have like a hiring freeze for the next few years. In my opinion, I don't think they need to do hiring in any substantial way for the next several years, essentially. Okay. So net income growth there, 35 to 40 PE would be very fair for this company if they're growing revenues 20% a year and net income 30% a year, right? And we're talking about a compounding annual growth rate of 40-ish%. 40-ish% under that scenario. We're talking about a stock that goes to the high 200s to low 300s. Today, the stock, you can buy it for $76. Pretty attractive. Here's my base case. This is just a fancy way of saying what I expect for the company. I expect them to grow revenue 23% in 2026. I expect their net income to actually not go up that much next year under my base case, essentially. I'm expecting only 15% growth for net income, all right? Then I have their their revenue going to 15% growth per year, 27 through 29, and 20% net income growth per year, 27 through 29. If you got 15% top line for a cosmetics company, 20% bottom line, 30 to 35 P is very fair for a company like that, right? Because people just keep rebuying these products again and again and again. That gives me a compounded annual growth rate in the 20s. ELF's a buy today. ELF is a flat out buy today. Will ELF stock go up in the next 3 weeks? Who knows? Who cares? The bottom line is ELF stock is going to be on its way closer to $200 over the next few years than it is, $50 over the next few years. So are those numbers like crazy? Like, no, those are, if you're educated on ELF stock, you'd be like, that's pretty like conservative numbers, if anything, right? My bear case for ELF has them only growing revenue 18%, the low end of their range in 26, with no net income growth next year. Then only 9% revenue growth per year after that. And only 9% net income growth per year after that. 23 to 28 P, and I still make money. Like, those are dog dirt numbers there. Those are dog dirt numbers. Oh, gosh. Put them in the pig pen with the mud. That's what type of numbers those are. And I still make money. Not much money, but I would still make money. If I can still make money in a bear case, it looks pretty attractive. So ELF, huge gift. Where's the next $20 for ELF? I have no clue. I don't know if the next $20 is down or up. I don't know if the stock's going to be $56 or $96 next. But I think I know where the next $100 to $200 is, and it's to the upside, okay? Bottom line in regards to that. Honest company. Alrighty. Honest company. Next up here. 30% hit today. This one, did it deserve to be down? Yes. Did it deserve to be down 30%? No, absolutely not. This is silly. Stock should have been down 5 to 10%. This is silly. Okay, $259 million market cap. Keep in mind, the company has cash and cash equivalents right now of like over $70 million with no debt. And they keep bringing in money. So this was ridiculous. Okay. Now, people are freaking out about the diaper business, right? The diaper business fluctuates crazy because a lot of it depends on when Target or some of the other retailers place their orders, okay? Sometimes Target and other retailers will place a massive order and, Honest diaper revenues go flying. And sometimes they don't place a big order during a quarter, and guess what? Big order during a quarter, we're rhyming, and guess what happens? Their revenues aren't quite there for the diaper category, right? So that's something to keep in mind in regards to this. And obviously, people are really worried about revenue. Revenue growth, there's not going to be revenue growth for the next year, right? Unless a miracle happens. There's going to be no revenue growth because they're going to exit several product categories that are hurting their margins, that's hurting their profitability, right? And so they're getting out of those. So I understand if somebody's looking for revenue growth, they're looking at Honest and like, there's going to be no revenue growth for next year, I'm out. Peace. I get it. When there's revenue growth again, do you think Honest is going to be $2 a share? Nope, it's not. That's the thing. It would be so perfect if it was like, I'll wait till their revenue starts growing again in 27. I'll get back in this stock, right? Think it's going to be $2? It's not going to be $2 then. It's going to be $4 or $5, $6 then. Because more than likely what Carly and the team's going to show is even as their revenues are going down, likely their margins are, guess what, going to go up. So as their margins go up and their profitability goes up despite revenue going down, once they get out of those businesses and exit the product categories that are hurting their margins and profitability, then people are going to start extrapolating numbers and going to be like, oh gosh, they're going to start turning revenue positive again in 27, right? And you've already got margins and profitability increasing with revenue going down. What do you think is going to happen when the revenue starts going up again? Oh my gosh. It's just math, ladies and gentlemen. And so, keep that in mind. The stock's $2 today. When revenue growth is there again for Honest, it won't be $2. It will not be $2, okay? And so, silly move in regards to Honest. And I understand it's a hated stock. No one wants a piece of that stock. We'll see in regards to that. I'll likely be buying Honest in the public account, more shares here soon. What did I buy here today? Okay. By the way, Discord chat's busy. We got a lot of members. Oh, look at that. We just got another new member. Now to 2,876 members. We got a new member just while I was recording this video. An all-time record today in terms of the most members in history. So, what stocks did I buy? Here's what I bought. Here's why I bought them. Nike, first up. I bought almost $14,000 in Nike here today. Nike, I mean, it's easy money for the next 3 to 5 years. I don't know other way to put it. It's just, it's a tax loss harvesting situation. I wouldn't be surprised if Nike sees even more lows here at the end of the year. I wouldn't be shocked at all. Anybody that's bought Nike stock pretty much has lost money on the stock. So if you need a stock to write off some gains against, people sell Nike, right? And they're like, it's not going anywhere for the next few months anyways. I'll buy Nike back in the first quarter of next year, something like that, right? And I'll tax loss harvest for now, write that off against my gains. Easy peasy, lemon squeezy. Celsius Holdings, we just spoke about that one. That's a big boy buy today. I bought, $43,000 plus. When I say a stock should not have been down, and then I come through with the big dog money, that stock should not have been down, right? It'd be one thing if I said that. I'm like, that stock shouldn't have been down. And then I don't come and buy it. It's another thing when I come through with a $43,000 buy here today. It didn't deserve to be down. That was ridiculous, silly in regards to that. PayPal. Bought another 140 shares of PayPal. That was a little under a $10,000 move, $9,300 move there for PayPal. That one's, oh man, I think the returns for PayPal this next 3 years are going to be insane. Insane for that one, right? My projections, have you guys seen my projections for PayPal? I think I have them saved here. Let me take a peek at PayPal. Low data. Look at this. You guys ready for this? You ready? Here we go. So here is PayPal. This is my base case for PayPal. I have them only doing revenue growth of 7% on average in the next few years. And guess what? My CAGR is likely going to be in the 20s for PayPal. And keep in mind, when we do these intermediate projections here, I'm not even factoring in for all the share buybacks they're going to be doing, right? Which is going to likely help that earnings per share be a lot higher than $7.33 in 2029. We could be talking about EPS of $8 to $10. With how many shares PayPal's constantly? You imagine how many shares PayPal's buying back right now with their cash flows that they have pouring in. My gosh, ladies and gentlemen. So I think PayPal's an easy CAGR in the 20s over the next few years. Easy. So yeah, I bought more of that stock here today. And I own a lot of shares in my different portfolios. Elf came through with a big boy buy for Elf here today. That stock should have been down. 5 to 15% would have been fair for Elf being down today, being that they missed revenue again. But 35%, what are you doing? I can't, it's just crazy, man. People are just so ridiculous with it. They sold Elf just a few months ago at $49, right? That stock was $49 just back in April. Does everybody remember Elf being $49 just a few months ago? Because it was. And guess what? It's 76 today, so you regret that massively. Let's go ahead and take a peek here at good old Elf on a shelf. Yeah, Elf got all the way down. I need to get this guy out of here. Elf got all the way down to $49 right there back in April, right? So, geez, you're already up 54% from there. And that's with a stock crash. Keep that in mind. Oh my gosh. Jeez. Crazy, crazy. I don't know why I thought Chipotle. Next one up here, Cake. Cheesecake Factory. That was just a small buy for Cake here today, just 70 shares, $3,300 a Cake. And then Amazon. I love the Amazon stock. I would say, if I had to say what's the best stock to buy right now, before we get in the reaction videos, what's the best stock to buy in Mag 7 right now, today? The best buy out of all the Mag 7 stocks today for the next, let's call it 3 years, Meta, without question. Without question. With that being said, I have so many Meta shares coming out of my ears, it's ridiculous. So I always have to watch my risk levels, right? So being that Meta is such an oversized position for me, it's very difficult for me to buy more Meta shares, okay? What's the second best buy in all of Mag 7 after Meta? Amazon, without question. That's why I'm buying Amazon right now. I'm not overexposed to Amazon. I could still, between all my different portfolios, I could still probably add another $100,000 to $200,000, if not $250,000 of Amazon stock, and feel comfortable. For me to go buy another $100,000 to $250,000 of Meta stock at this stage with how many Meta shares I have, it's difficult. So remember, that's how I make it through the bear markets, right? I don't get too overexposed to any stock, because that keeps you, out of that situation. I can still outperform in a great bull market the way I position my portfolio. So I don't need to take some crazy risk and go all in a stock or something like that, right? Alrighty, let's react to some videos.
Here today, obviously, we've had a lot of discussion about how AI is driving things lower today. You're looking at the 50-day moving average. What's so important about what you're seeing right now?
Hey, Courtney. So, yeah, it's been a remarkable streak. We have not touched the 50-day moving average in 145 trading days. That's the third longest streak since 1990. The second longest streak ended in 2007 at 147 days. So we're quickly, coming up on the second longest streak in the modern era. And so that's the backdrop. Now, there's kind of two competing forces here. On the one hand, trend and momentum of the index of the S&P and the Nasdaq are quite strong. And we're in a seasonally bullish period when the market's in an uptrend. November, December tend to be even that much stronger. The issue is that under the surface, as many are aware, the internals are anything but robust. Last week, for instance, we had 9% of the S&P hit a 52-week low. And the issue, you can have a market when there are a number of stocks underperforming on a relative basis, but when you start seeing absolute price weakness to the extent where they hit a 52-week low, and let's be clear, 25% of the market is within 10% of a 52-week low. So there's really this bifurcation going on. And so that setup leads us to, at least at a very minimum, test the 50-day moving average. But we think more likely you actually see something closer to 6,400, 6,500 in the S&P before you see more fully washed out conditions.
Okay, let's talk some market now. Some big market talk. Where's the stock market headed, right? Where are the financial markets headed? Because obviously we just spoke about a lot of individual stocks there, okay? What have I warned you guys about consistently for the past 6 months? It's been something, if you watch my channel religiously, right? Something I've been warning you guys about for the last 6 months, time in and time again, right? What has it been? 2018. And watch out for the fourth quarter of this year, right? Is everybody watching out now? Is everybody listening? I warned everybody about this for 6 months. I don't know how many people listened, right? Again and again and again on this reaction channel, on the main channel, 1,000 times. Watch out for the fourth quarter of this year. Reminds me a lot of 2018. 2018 had a lot of pain for investors. Exactly what we're seeing. People are experiencing pain right now. I just pulled a Bitcoin. Bitcoin's down about 20% from its recent highs, right? We got a lot of these individual stocks getting slammed all over the place. Like, I looked at how many stocks were down 15 to 35% today, and it was a long list of them. Did you guys see? I think I still actually have it up here. How many stocks were down? Like, look at this. Look at how many stocks were in severe pain today. Like, look at this. There must have been, how many stocks were down, let's call it 10% plus today. Look at this. We're talking, what is that, 40 stocks down double-digit percentages today. That's an astonishing number. Jeez. So there's a lot of pain out there, right? But I warned everybody about that the whole year. Additionally, next up here, listen, this is another reason I pulled up Bitcoin here, okay? The other reason I pulled up Bitcoin is that's a very important asset to understand if people want to take risk or not. When Bitcoin is selling off, it's just the ultimate sign for people don't want to take risk. When people are bidding up Bitcoin, it's the ultimate sign of people want to take risk. They want to buy riskier stocks, right? Small cap stocks. When you see Bitcoin selling off, small cap stocks selling off, right? Which let's check out IWM. Okay, IWM, let's go ahead and take a peek at that one here over the past bit of time. So from where we hit those highs recently, the recent highs was right here, and IWM's down about 4.5%. So it's almost technically it's kind of in pullback area right now, that 3 to 5% range. It's kind of like a pullback. If it gets that 5 to 10% range, we'll talk about a big pullback. And then if it goes 10% plus, like 10% to 15%, we'll call that a small correction. And then if it goes, 15 to 20%, we'll call it like a medium correction. If it goes 20% plus, we'll call it a large correction, a severe correction, right? And so that's a sign that people are not looking to take risk right now. Now, the important other thing to understand about this and where the overall market's headed, when you see deterioration in Bitcoin, Ethereum, and smaller cap stocks, right, and then mid cap stocks, the last thing to fall before you can finally bottom out everything is the indexes have to get hit. That means S&P 500, and that means the Nasdaq. Once those get hit, then we can talk about eventually bottoming out the overall financial space and trending up from there. But it's a process, ladies and gentlemen. It's a process, and it goes step by step. And if you can look back at basically almost every kind of crash scenario, and it all plays out the same. You could probably look back at April. You can look back at what happened in 2022 from the 2021 highs, right? At first, it was, Bitcoin started to get hit, Ethereum started to get hit, other crypto started to get hit, right? Small caps started getting hit, mid caps, and then it was the whole indexes. So just understand there could be more pain ahead for this market in the short term. Short term meaning the next 2 months. I know November and December are usually great for the market. In 2018, they were not. That doesn't mean every year is great for the market in November, December, right? And so I've been, I obviously warned people again and again and again about there's, could be pain in fourth quarter this year. And now people are like, oh yeah, shoot, there was pain, right? But keep in mind, we could still get that indexes down quite substantially from here. We could see double-digit percentages before year end, but a lot of that depends about what happens with government shutdowns, right? Does that end anytime soon, or does that keep dragging on? The longer that drags on, the more the market's going to get freaked out here, right? So that's going to be a whole game at play. What happens between the U.S. and China, that's a whole game. We got NVIDIA earnings on deck, that's a whole game. What news or not news do we hear about OpenAI? That's a whole game.
What about the put-call ratio? I know you watch this one too.
Yeah, so look, the other issue, aside from breadth being much weaker than the index would have you to believe, is sentiment is quite complacent. So put call ratios are a good transactional indicator. You have survey data where you ask people, are you bullish and bearish? But the put call ratios are really, what are they actually doing? And they're bumping along year-to-date lows on a 5 and 20-day basis, meaning there's very little interest in hedging. And that's another concern. You can also see it in something like the National Association of Active Investment Managers. Their exposure last week hit 100, which was the highest since July of last year. So there's just a lot of indications that people are, certainly, if not euphoric or optimistic, at least complacent, and that's another market risk.
I really am always interested in consumer and market psychology. And Bitcoin has sort of been hovering around this $100,000 mark, which is a psychological level for people that watch this. What does it tell you when you look at it on the technicals?
Yeah, so two things. From a purely price standpoint, 110,000 was kind of our initial support, and that certainly broke. Obviously, 100,000, as you mentioned, is psychological. That is a level that...
I had a friend who bought a bunch of Bitcoin a couple of days ago, and I was telling him, he's kind of asking about what is potential downside. And I was telling him, here's how much downside based upon the stock market. And I told him, listen, if the Nasdaq goes down 10% between now and year end, I said Bitcoin's probably going to see the $75,000 level or maybe even under 70,000, right? If we saw the Nasdaq go down 10 to 15%, I said if the Nasdaq went down like 20%, you're talking Bitcoin probably down to 50,000, right? Why? Like, how do I have confidence in making a call like that? Because it always plays out that way. Like Bitcoin basically is like a 2x, 3x leverage on the Qs. It's just as simple as that. You can look back at almost literally any time period. People try to argue this. I'm like, this is factual. This isn't opinions. This is factual. Look back at 2022, right? Nasdaq was down 37% peak to trough, Q1 2021 to Q4 2022. How much did Bitcoin go down? 70%. And that's just consistent. Like look at just since the kind of recent highs we had. S&P 500 down 2.6%, IWM down 3.7%, Q's down 3.73% from the recent highs, right? And look at Bitcoin, 10% down. Look at Ethereum. Ethereum is basically like a call option, put option on Bitcoin, right? And look at Ethereum down 17% in that same amount of time, right? So you take those Q's down another 10 percentage points from here, you'll be talking about like literally Q's down 10% from here. You're talking about Bitcoin being down another like 25 to 30% from here. And you could be talking about Ethereum down 35 to 45% from here if you take those Q's down another 10 percentage points or so. So it's a simple game, man. It's a very, very simple game in regards to those assets.
People will be watching.
And it's not opinion. It's just like look at every single cycle and you see the same exact thing.
But, the reality is it just doesn't act well given what gold's been doing, given what the Nasdaq's been doing. And if you look over the last couple of years, there's a very tight correlation, or there has been, between Bitcoin and the Nasdaq. And, all correlations do break eventually. But I think, the relative weakness of Bitcoin was another red flag for us when coming into November looking at the Nasdaq.
And then very quickly, before you go, I want to dig into gold just a little bit more. It is down just a touch here today, but what a run gold has been on. Can you sort of tie it all together for us between what you're seeing with markets, Bitcoin, gold, and all those technicals? What does it mean? Is it really breaking from how we typically watch gold trade?
I think you can get, you can look at a lot of different ways to ask what gold means, but as far as what is the chart telling us? Mm-hmm. I mean, look, it got about 30% above its 200-day a few weeks ago. That's about the widest spread it's been in the last 20 years. So some consolidation was needed. It's had a little bit of it, but on a monthly basis, it's still very extended. So we think probably setting up for another leg lower, also likely testing its 50-day, as many other markets are as well.
Yeah, so the bottom line is gold, market keeps going down, gold's going down too. A lot of people assume like, gold, Nasdaq goes down, gold's going to go up now. Like, sorry, it all goes down, You can even look at the great financial crisis. Like you would have assumed during that stock market crash where the indexes fell 50%, you would have assumed gold would have gone up, right? Because it's supposed to be a hedge and they announced all the money printing and whatnot during that crash. Check out gold over that time period. Yeah, no, everything was going down in Chinatown, oil, everything. Alrighty, let's react to this one.
Discuss TD Cowen senior retail analyst Oliver Chen. Oliver, it's great to have you here, and this is an interesting one because this stock had been on fire for a long time. It sold in a number of retailers, and a number of retailers are having to go through some price adjustments. So can you explain to those that may not understand the particulars how that really did have an impact on the quarter?
Yeah, basically, Courtney, Elf is raising the cost of their product by about $1. There was a slight disruption in terms of retailers taking a little more time to raise the price, and the company stopped deliveries to those retailers until they did raise the price. So that was an issue in terms of core ELF brand growth. And that is overall an issue, too, as core ELF brand is growing around 2 to 5%.
And listen, ladies and gentlemen, what is that? What is that he just said there, right? You know what that is? It's two things. One, power. Elf has a lot of power. By them basically telling the retailers, we're not sending you product till you go, that's power. Not all brands can do that. But Elf, you don't have Elf, you're irrelevant. Your Target, your Walmart, your Amazon, you don't have Elf? Like, that's what the kids wear. Like, have you talked to the millennials? Have you talked to Gen Z? Like, okay, they're going to go somewhere else to get their Elf products then at that point in time because the best products for the price point you can get them at, right? And so, like, most of their cosmetics products are under $10 and they're high quality. Like, customers love them. So that's very substantial in regards to that. The other point in regards to that is what? Guess what? Short term. It's a short-term nonsense thing, right? Okay, it affected the numbers negative in this quarter. Who cares? If you're planning on owning Elf for the next 3, 5, 7, 10 years, it's irrelevant. Yeah, it hurt the short-term numbers. Whoa. You know what I mean? Like, whoa. Oh, gosh. We're screwed for the next 10 years because Elf didn't send some product to some retailers because the retailers were taking too long to, like, it's like you won't even remember this. Like a year from now, you won't even remember this. Never mind 3 or 5 years from now. Give me a break.
In half. This is a brand, Courtney, that grew around 20% previously. So it's a very good company, and we are recommending the stock on a long-term basis, but expectations were high, and we thought expectations were high coming into this quarter, and growth has decelerated.
And so even though they're going to have to take these price increases, you don't believe that it's going to deter demand for this product. Obviously, this is a lower price product than some other makeup brands out there. This is more mass, less prestige.
Yeah, we see consumption trends as being quite attractive in terms of 7 to 10% in the market, but retailers are destocking and they're facing tough comparisons. So the reality of ELF core brand growth is moderating relative to the past, but it's still growing, and it's a very innovative company that reacts with speed. The stock is down a lot because expectations were very high, and this had grown a lot faster in the past. But the backdrop remains pretty good for beauty in the long term, given that it's a resilient industry.
Love to move on to Tapestry again.
Okay, so now you want to talk about a scenario where ELF stock becomes an absolute rocket ship. Short term meaning the next 3 months, and the stock goes from $70 to $120. You want to talk about that for a moment? How does that happen? I'll tell you exactly how that happens. There's a potential Trump tariffs could be overruled by the Supreme Court. Right? Potential. Might not happen. Might happen. We don't know. What happens if it is? One of the biggest beneficiaries in the entire stock market is ELF. Because they would see massive money coming back to them. And think about it like this, right? They're going up. They're going up $1 on all, pretty much across the board on their products. Let's say they don't have to start, pay that tariff anymore. Do you think they're going to go down $1 a product? Of course not. So then their margins would explode to sky-high levels that we honestly haven't seen. So in that scenario, you would likely see ELF go from $70 to $120, and it would happen like that. You want to talk about ELF being up 20, 30% in a day, like it just was today? Have those tariffs get removed? There you go. So I'm not planning on that, but just understand, if you think you've got all the time in the world, like, I could buy ELF for the $70 a year from now or something like that. We'll see about that. Next up here, let's talk about high net worth individuals, talk about what they're doing with their money, my perspectives on this.
That's Robert Frank. He's got the details.
Good to see you, Andrew.
Nice
Welcome
to see you,
back. Only a third of millionaires, in fact, surveyed use a wealth advisor, and among those who do, many are planning a change. A survey by Long Angle, that's the network of high net worth founders and executives, found that using an advisor does rise with wealth, so only 22% of those worth less than $5 million use an advisor, while nearly half of those worth more than $25 million use an advisor.
Do I personally use an advisor? No, I do not. I do not use a financial advisor. I have no interest in using a financial advisor, right? I can understand a lot of people wanting to use a financial advisor. It really depends on how much you trust your decision making, right? How much you know about the financial markets and emotions. It's not just about like, I got to understand income statements, balance sheets, cash flow. Understand most financial advisors don't even have a clue how to properly value a company. They're financial advisors. I would describe them as very good for basic personal finance stuff, right? Like more income than expenses, like let's make sure we own some, index funds, things like that. Like, maybe some tax related things, although financial advisors aren't even going to help you a lot. For most of them, they won't help you a lot with taxes. They're going to go ahead and send you off to a tax professional. I wouldn't be surprised if they get a fee on that as well, right? So, so some people, I can understand them needing a financial advisor. Like imagine, you're married to somebody, they make a ton of money, they pass away, you don't know anything about money, right? Like, gosh, you should probably get a financial advisor in that situation. So you don't screw everything up. Or some people that maybe they gamble their money too much and they need somebody overlooking things, right? Or they just don't really care about money that much, but they came into a lot of money. Either they inherited the money, or maybe they were just really successful at business, but they don't know that much about money. Like, I understand those individuals using financial advisors, right? So a lot of it comes down to that, right? To each its own, right? For me, no.
Them are considering switching advisors, with most of the complaints around cost, a lack of personalized service.
The one thing I do as far as a professional, I do use a professional in regards to something money related. And you know what that is? Taxes. I outsource that to the professionals. I let the professionals handle my taxes. I've been doing that for years. I think I first started outsourcing my taxes to good professionals here in Vegas. I think I did that back in, like 2018. Like once I got to a certain net worth, which I will not describe, but once I got to that number, which was in 2018, I said, okay, I'm handing this off to somebody else, right? And that's when I went ahead and made that move. And ever since then, I've always used, professionals for taxes because you want to stay out of trouble with the IRS, right? Like I'm not trying to have any beef with them. I make sure everything's handled. The individual I use has actually a lot of authority at the IRS. And so, there's like different levels of like respect depending upon certain titles and like certifications you have and your connections and things like that, right? So that's the one thing that I could, like, honestly, everybody that's higher net worth, you should use a professional for your taxes. If you make, $60,000 a year and you got a net worth of $40,000, does it make sense to use a tax professional? Probably not. It could, but probably not. But if you get your income to six figures plus, if you get your net worth, certainly over $1 million, but certainly if you go to multi-millions, use a tax professional. Because remember, these tax laws are changing all the time. Every year when I finally have my meeting with them, they tell me about this thing changed, this thing changed, this thing changed, and now you can do this and blah, blah, blah. I don't have time to keep, my focus needs to be on making money, right? Like that's where I can get the best ROI. Saving money on taxes, I'll outsource that. And usually the ROI you get from using a tax professional is going to be easily, especially if you're higher net worth or higher income, is going to easily be usually thousands or tens of thousands of dollars. And you're not going to pay them thousands or tens of thousands of dollars. So it's one of the best ROIs you can probably ever get, just to be honest. And in terms of peace of mind, right? Because let's say you get audited, you do your taxes yourself, right? And you got a multi-million-dollar net worth and you make, $250,000 a year, blah, 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 whatever, right? Ooh, when you get audited and you don't have a professional representing you who has some authority at the IRS, good luck.
Response times. Now, the survey also asked millionaires to rank 14 other professional services commonly used by the wealthy, from personal trainers to private schools, accountants, and estates attorneys. Personal trainers ranked highest on the satisfaction score with a 9.3 out of 10. Personal sports coach, private schools, sports coaches also got high satisfaction marks. Accountants and estate attorneys, though, they ranked below pool services. Therapy also ranked near the top.
Yeah, because one's like you just need it.
One's
the other,
like you need it, and the other one's like
you want it.
you want it. Yeah, and in fact, when you look at therapy, this was an interesting one. Millionaires under 40 were 3 times as likely to use a therapist than those over 50. Now,
that's just generational, isn't it?
It's absolutely generational. Emotional health being a much more important issue for this group. You can find all the numbers and how much the wealthy are paying per year for all of these services. That was really interesting. How much they spend on private schools, private trainers, all that stuff. That's going to be in your
read this
newsletter coming out in the next hour. CNBC.com/Inside Wealth. You guys have personal trainers, right? You certainly
yes,
look like
and I'm an emotional wreck, but I may need therapy.
Have you ever?
So, by the way, in regards to that, and it's a serious subject here, when it comes to like physical therapy, like personal trainer, right? I think that's a great thing for a lot of people if you get money. If you have trouble holding yourself accountable and you don't really know that much about working out, right? Like if let's say I never played football because I had an unbelievable strength and conditioning coach. I played football for 5 years, all 4 years of high school. I had an unbelievable strength and conditioning coach. He was so ahead of his time. Like I see professional athletes doing certain workouts that he had us doing back when I was in high school in like 2004, 2005. He was like, this guy honestly is a legend. Like in my eyes, his name was Coach Schmidt. Coach Schmidt, legend. I'm like, I see NFL players doing the workouts he had us doing back in the day. And I'm like, dude, this guy was so far ahead of his time, it's not even funny, right? And then I ran track. I was obviously a sprinter in college, right? So I know a ton about working out, like, about as much as you can know. And then I'm able to hold myself accountable. But I can tell you, if you don't have all that knowledge, and if you are a situation you have trouble holding yourself accountable, 100% get a personal trainer. It's well worth the money because they'll help hold you accountable, and they'll be able to, obviously teach you a lot if you don't know that much, right? And your physical health, your health is everything. You know what I mean? Like, you could be a billionaire if you're in poor health. Oh gosh, you'd wish you'd have $100,000 to your name and be in good health, right? Like, it's not worth it if you're in bad health. It's awful. And then in terms of, like therapists and things like that, yeah, if somebody's going through something or, has trouble dealing with something or whatever, like that's always a good option as well, right? But keep in mind with all this stuff, personal trainers, or if it's a therapist or something like that, right? Not everybody's created equal. You got to find really good ones. Same thing with taxes. You might assume every person that does taxes, they're all the same. They're not. They're not. You might assume all lawyers are the same. They're not, right? I always am willing to spend as much as it takes for top tier tax people, top tier lawyers whenever I need them for something. That's like, I get the best of the best. And I would do the same thing if I had a therapist. I would do the same thing if I had a personal trainer. I would get the best of the best, because at the end of the day, your results will go up significantly in any of those sorts of categories, right? So yeah, your health is everything.
Are you willing to cop to
Sure.
that?
Years ago. Many years ago.
I have never, but I have 3 dogs.
Their therapy?
They're your therapy?
No therapist can come close.
You're highly satisfied with your dog therapy.
They're better than
10 out of 10.
They're better than we are. They are. We don't deserve them. We really don't.
After I joined the show, I thought I really got to get some therapy, right?
You know what?
But this is therapy, right? Is that what you're trying to suggest? I know this is
therapy.
3 hours of therapy.
This is therapy, but I support your efforts to get additional therapy wholeheartedly. I'm not going to put you down for that.
Okay, I got one for Robert Frank that's just a curveball.
Yeah.
There are people in New York who I think the wealthy who might be looking for a therapist after yesterday's election. And more importantly, were looking for therapy when they heard that Lena Khan was joining the transition team.
Which just goes to show you, looking back at the Biden administration, she had a very important job and we had her on all the time and hung on.
I think we should have her back and talk about what's going to happen in New York City.
But let's just know. Okay, so as long as we know, but she is a
sure. No, but that's what I'm saying.
And she was running a very important department.
Yes.
In the Biden
Think about it, Andrew.
Well, no, I wonder what it portends for business in New York. It was funny.
It's great for business. It's awesome.
A number of business leaders in New York reached out to me yesterday. I was traveling back from London, and it wasn't even the election result itself. It was when this Lena Khan announcement was made.
Right.
It was like they were sort of like frozen in place, and talked. Some of the texting and back and forth was more about sort of what had happened to the merger business. Obviously, there's a lot of bankers in this city, financiers in this city, and sort of what the approach is. I don't know if she's going to have a role in the future.
What can she do, though?
In the future group or not?
What my question was, this appears to nationalize a city mayoral staff, right? Instead of saying we're going to operate the city as good managers, which is what the mayor's job is, it somehow makes it seem like we're going to be a platform for some national ideological.
I don't know. I was also surprised by that there were so many people from the de Blasio administration, of all things, and they were pointing to that as if, given that they have quote unquote experience. But the truth is, I think most New Yorkers, no matter what your politics, did not think that was a golden era in terms of managing the city.
What is she going to do? What is her role? Did they say what her role is?
I could not ascertain that. But I will work on it. I'd love to have her on the show, just talk about the future of New York.
That would if I had business in New York, I'd be scared as well. Like, oh boy, we'll see what happens with that. In regards to Linda Khan specifically, right? And I don't mind it because I'm going to turn 36 here in just a bit. And my hope is in my 40s, I really want to get a place in New York City. I really do. I really love New York City. I do. Not as much as I love Vegas. Vegas is my number one, okay? But New York City, I love New York City. That's my number two, okay? And so I love to get a place in New York City, specifically at the Steinway Tower. So my hope is over the next 4 or 5 years, all the rich people start, moving out of there en masse, go down to Florida, right? And then I could get a place for cheap in New York City. And by then there'll be some new, people bringing back New York City. We're going to bring it back, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Pin comment down there to apply to your own private stock group, private wealth group, get access to 1000xstocks.com, all that good stuff. Much love and have a great day.